Ant Financial IPO halted, delayed. So why exactly should you be watching this video tutorial on Ant Financial? Quite simply, Ant Financial is not going away. They are simply being delayed in this process for IPO. It's very likely they'll try again sometime down the road. So if you're prepared, opportunity comes, you know whether it works for you or not. Now, if you stay to the video, I'll be sharing with you more details. I actually tried to do a private placement to grab some IPO of Ant Financial. So I'll be sharing with you mechanics of how it works. Now, you may know Ant Financial as a superb fintech firm, but just to clarify things, Ant Financial is actually not controlled by Alibaba. Yes, they are an associated company to Alibaba because Alibaba, in this article as I'll pull out for you to see, owns 33% stake in Ant Financial. And this was after a very lengthy dispute, which, is a separate story. But nonetheless, to appreciate things, Ant Financial is actually controlled by Mr. Jack Ma. So let me pull this out for you to see. Mr. Jack Ma actually controls, as I've highlighted at the bottom, Mr. Jack Ma has veto rights over all such matters and resolutions to these two investment vehicles, which are Hangzhou Junhan and Hangzhou Junao. So these two investment vehicles actually control 50.52%, which means more than 50% stake. And Mr. Jack Ma can control any decisions in Ant Financial. So really tight grip on things. I'm such a fan of Mr. Jack Ma. I've actually studied a lot of his sayings. I've actually heard a lot of his videos. I even brought my son down to Hangzhou, his campus, Alibaba campus. And actually in Hangzhou, everybody knows him as Ma Papa. So he is really a reputable businessman, in Hangzhou. So Ant Financial is, yet his second child, so to speak. And what a fantastic child to have, because Ant Financial, let me pull this up for you to see. It has a monster scope of things. I can't even, know everything on their car owner service, jobs, flight tickets, leisure. Everything is there. So fantastic. They really own so many services that can provide this ecosystem to Chinese customers. That is why, Temasek, they are also looking to buy this IPO. They've actually a stake in Ant Financial already. And that's why Ant Financial is also known as the IPO of this decade. So let's find a bit more of what exactly does Ant Financial do. Hi guys, welcome back. Now in this first part, I'll share with you how to understand Ant Financial's size and growth. In the second part of the video, I'll touch on the key business portions, especially where the growth is really coming from Ant Financial. Because when you're investing into technology firms, the key crux is how fast they can grow, how fast they can dominate the entire marketplace, correct? So understanding it is really more important than knowing its actual profitability as of current moment. So the first part, how big exactly is Ant Financial? Just in case you don't know, let me pull this up. The various businesses that they have. More than 1 billion customers for ALIPAY. Just to compare things, WhatsApp globally has only 2 billion. So Ant Financial is not much smaller than WhatsApp in terms of total users. And a large part of it comes from Chinese users. The next part that I took notice is 118 trillion renminbi in digital payments. I did a curious search on Visa, and Visa in terms of total global digital payments was 2.3 trillion US dollar. If we compare things, that means Ant Financial's digital payments are more than 5 times that of Visa. That is a fantastic scale of things. And just in case you are associating Ant Financial with ALIPAY only, because you go to supermarkets, you see ALIPAY there. You go to touristy places, you see ALIPAY there. You think ALIPAY is everything of Ant Financial. It's actually not true. Let me pull up this pie chart for you to see. What do we realize? In the blue segment, digital payments, they only contributes 35.9% of revenues only, which means the bulk of things are coming from other places. In fact, CreditTech contributes even more than the digital payments in terms of revenue. What else is making up the revenues come from InvestmentTech, InsureTech, and others. Others, if I'm not wrong, includes blockchain technology. So the key message today that you can take away, if you can't remember anything much, is that Ant Financial is bringing the whole system more than just digital payments, and this has been communicated by its corporate communications director. We have moved beyond payment business, so they are moving towards where is your next question. To answer that, let me pull out this for you to see. This was a remark made by Mr. Jack Ma many years ago, and he actually mentioned, if the banks don't change, we'll change the banks. Of course, that's a very daring statement to make, but actually through his Herculean effort in building Ant Financial, right now they're really reshaping the banking industry in China. Every bank, and if I'm not wrong, wants to be on their good books, simply because if we look at how things are being done, they are the #1 players in terms of digital finance technology platform. they're number one for CreditTech, they're number one for InvestmentTech, they're the number one for InsureTech. So Ant Financial is really dominating all these key businesses that traditional banks used to run. Because banks lend money, that's credit. Banks do investment advisory, that's InvestmentTech. And banks, of course, distribute insurance products, and that's InsureTech. So banks really rely on Ant Financial to send business to them right now as a platform. That is why Ant Financial is seeing fantastic growth numbers. Let me pull this up for you to see. This is actually the financial information also extracted from the IPO prospectus. What do you see in the green arrows on top is that revenues have grown from $65 billion in 2017 all the way to $85 billion in 2018, and 2019 $120 billion in revenue in renminbi. 2020 is going to crack that number very easily, but that number has been skewed by COVID requirements and stuff. But if you just purely rely on the last 3 years trends, you realize the enormous growth potential Ant Financial has. What about profitability? You see that in the last 6 months, Ant Financial has actually exceeded the whole 2019's profitability, clocking 21 billion in terms of gains already. That red arrow I'm drawing at the bottom. Half a year clocked more than 1 whole year. Maybe some parts is attributed to COVID-19, whereby they actually scaled down expenses, because COVID-19 means everybody's doing things digitally more and more. So they've actually scaled down expenses. They may have, managed their expenses and their depreciation correctly to ramp up for the IPO itself. So again, we're seeing fantastic numbers. But just to measure things, let's look at again the last 3 years trends. You realize strong growth in profitability also. And where is the profitability going to come from? That's where I'm really trying to value add for you. The key part, as what Mr. Jack Ma said, he's challenging the banks, and it's boxed up in this red portion as I've shown you over here. This is where they are challenging in CreditTech, InvestmentTech, and InsureTech, which I'll deep dive for you in the next segment. But the key part to know is at the bottom part where I've drawn a red arrow, is that you realize that profit margins have actually increased from 2017's 12.5% to 2019's 15%, which means that this banking service on credit, investment, and insurance is really high margin, much better than payments. That could be a reason why they're moving away from just being a purely payment solutions, ALIPAY only, to this more profitable segment of feeding business to banks and earning a good revenue and markup from it. So now with that, let's move on to the next segment, whereby I'll deep dive for you the businesses that they actually own. Now, as I was looking through the 647-page prospectus of Ant Financial, I keep seeing this word coming up. Redacted, 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 and more redacted. There's so much confidential information. I haven't seen too many, technology IPO prospectus, but this comes as a shock because I've never seen so much things being hidden away. It really goes to show you that there's a lot of things that's confidential even at this listing point. But let's look at trends to really decide on Ant Financial's business. The first thing to note is, of course, the CreditTech, whereby I've shown you before, 39% in terms of revenue contribution. So what exactly is CreditTech? Let me put this up for you to see. Growth in terms of China's consumer credit. And credit actually comes from two parts. The first, actually consumer. The second part is business credit. And what a third party has been saying, this Oliver Wyman has been saying, is a compounded annual growth rate of 11.4% is expected from Chinese personal consumption in terms of credit, simply because Chinese customers are not using too much credit cards. Only 25% of the population in grey over there has credit cards. That's very surprising, correct? Because if you are in Singapore, for example, you use credit cards. I use credit cards myself. I'm sure anybody that as of age and having the qualifications in terms of income will definitely get a credit card very quickly. In America, they use so much credit card in terms of that. So Chinese consumers really don't use credit cards too much, and there's a lot of potential to stretch on that end. Now, Chinese consumers are big players. They actually spend a lot of money. I did a lot of research, in COVID period in terms of how economies are going to be impacted. I looked at Australia's economy. I realized things such as this. Lobster market in Australia depend a lot, as I've highlighted, in yellow over there. 95% of Australia's lobsters go to China. And what happened in COVID period, whereby there was no Chinese consumption, Australian lobster business really suffered badly. And it's not only Australia, I've also boxed up. South Africa actually sells a lot of lobsters to China. So Chinese consumers spend big money. Imagine if they get hold of personal credit and spend on their own internal markets. That's a big growth potential. So next part is SME, SME loans, small business loans. So as mentioned also by this Oliver Wyman, they also mentioned a great projection, a very optimistic projection of a 40.8% compounded annual growth rate for online SMB credits, which means as small businesses grow in China, a lot of them are turning to online methods to find credit sources to get borrowing, and Ant Financial is really positioning themselves as the intermediary to link them to places where they can borrow, simply because they are not the ones who are actually doing the lending itself. Let me put this up for you to see. In terms of CreditTech, their approach is not to use their own balance sheet or provide guarantees. As of 30th June 2020, approximately 98% of credit balance is actually farmed out to third-party places, partner financial institutions, or securitized, which means Ant Financial actually don't carry a lot of credit risk. They just farm out the business itself, take a referral fee, and then there's not too much risk to the business itself. Fantastic. It's like Uber not owning vehicles and yet sending taxi services all over the place. So that's what Ant Financial is really doing in terms of the credit markets. Now let's move on to InvestmentTech, which is contributing 15.6% of revenues to Ant Financial. And what exactly is InvestmentTech? Before we get there, let me pull this chart up for you to see. This actually describes Chinese consumer behavior, Chinese personal investable assets. What are analysts projecting? They are projecting by 2025, 28% are going towards fixed term investments. So actually Chinese investors don't really like equities as much as the rest of the world. They like fixed term investments. That's the Chinese style of doing investments. And InvestmentTech of Ant Financial is actually to send out all this business, refer the business out. And how does it look like? This actually is an example. China's largest bank rolls out more deposit services with Alipay, and that bank is actually ICBC. And they're actually rolling a 3-year term deposit with Ant Financial. So actually, this could be a structured product, this could be an endowment, this could be a fixed D. I don't know details about it, but that's what consumers want. A longer period one whereby it gives higher interest, and Ant Financial is just farming out all this business. And that is actually confirmed in this statement over here. They generate technology service fees from our partner financial institutions that are based on volume. So they actually refer out business and generate technology service fees. So again, they're not selling products, they're just referring it out and generating fees for it. So very smart business model in a lot of ways. And this InvestmentTech, just to show you, in terms of June 2019 to June 2020, which just completed, 36% year-on-year growth. Fantastic growth rate, which means a lot of people are moving monies to Alipay, and Alipay is just farming out all this business to asset managers and banks. So that is really a nice business model. And not only that, Ant Financial also has blockchain technology. I'm not an expert in blockchain, so all I can is just to show you a little glimpse of things or what I can read from there. They actually have this N-chain platform whereby, I believe in blockchain, it's just that it is something that's going to take time to build. And once it's there, it's really going to help small businesses track things. If you study blockchain more than me, you kind of know what it is. And N-chain is something that possibly could be a big potential thing 10 years down the road, whereby blockchain is being adopted all over the world. So that is going to help SMEs, and they already have a lot of arms tapping on that space. But the part whereby I'm more familiar, of course, is InsureTech, because I'm in the insurance business in a lot of ways. So I looked at this curiously, and this indeed is the fastest growing, although the smallest, the fastest growing pie in terms of their financial services. And what can be seen is actually it's grown from 3.5% contribution to 7.4% contribution to the overall revenue charts of Ant Financial. So InsureTech is really a big thing. Maybe it's competing with, for example, Ping An Insurance. Ping An is very tech-based, or maybe they are collaborating. I don't know details as of now. But I do believe that in a lot of ways, Chinese consumers are underinsured just as any developing country in its starting years. And this confirms things. Insurance penetration in Chinese market is only 4%. In US, it's 11% as a mature market, Japan 8%. I think Singapore must be closer to Japan's standards. And Chinese consumers are really underinsured in a lot of ways. So analysts are projecting a 38.1% compounded annual growth rate. And again, Ant Financial is the biggest InsureTech player. Of course, they'll be the key beneficiary to this enormous growth of things. So again, InsureTech, how is it done? It's again through technology service fees from partner insurance institutions based on a percentage of interest premium and contribution. So again, it's technology service fees referring the business out. Very smart, very asset lean in a lot of ways. So with that, hopefully it explains, CreditTech, InsureTech, and InvestTech, because these three are the financial parts of where they're trying to grow and financial, away from just ALIPAY digital payments. They're really trying to build this arm whereby they are able to farm out all financial services to, all the various financial institutions and earn technology service fees. So that gives you a glimpse of the potential of Ant Financial, especially with the various strong growth rates. Now, if you have benefited, smash a like so more people can see valuable content like this. Now, to end things with, I have something interesting to show you. This is actually the performance of Hong Kong banks in terms of the ETF. There's an ETF that tracks and baskets all the Hong Kong banks. Chinese banks are of course in this ETF itself. And what can we learn from this is that banks are losing in terms of market cap ever since 2018. And this is a clear sign. Fintech players are really eroding banks in terms of their business models, squeezing their margins, taking a share of it. And Ant Financial, of course, is the king of fintech firms. Now, as I promised you at the start of the video, I'll share with you my journey in trying to get some Ant Financial IPO shares for myself. Now, there are a few tranches. In terms of placement, it comes before the public balloting. But I don't know if you know how things work, but in terms of placements, there are also a few level of tranches. There's institutional tranche, which means funds, indexes, they'll get a priority allocation for Ant Financial if it ever did list. And then the second is actually a private placement tranche. The fees for it are slightly higher. You pay a premium, but there's a much better chance you get some allocations. Now, as we know from this journey, Ant Financial was more than 800 times oversubscribed. $4 trillion was ready to grab some IPO placement, so it was crazy. I was in a private placement tranche, and yet I couldn't get anything, and also it was crazy. Over demand in a lot of ways. And then the third is actually the public tranche, public placement tranche. So in that, the fees are lower, but again, you get a smaller chance with a smaller pie. So think for yourself, or work with a broker that can get you opportunities. So hopefully that shed some light. When Ant Financial comes around again, maybe I'll share with you another video. And with that, if you have comments, questions, leave them below. I'll see you in a future video. Take care and goodbye.